Hi guys, this is Mark Shawson, the Pattern Trader. As our members at the Pattern Trader well know, my trading philosophy, my trading approach, my trading methodology is not predicated on making money every day. In fact, it's not even predicated on making money every week or every month. Frankly, I'm just trying to make 3 good trades a year. And as you can see in this particular trade in silver, where I bought silver in the mid 1800s and sold it at almost $26 and made mid 6 figures on this trade. So frankly, all I need is a trade like this once a year and I'm good to go. But actually I hit quite a bit more than just once a year. I just wanted to give you an example of the kind of trade setups that I look at, and then I'm happy to sit in these trade setups for days, weeks, or even months while they are extending and making me profit. So this is very different than what you see on the internet. This is very different than any other methodology, which is predicated on moving averages, on short-term charts, and extracting a very small amount on each and every trade. My contention is you cannot do this consistently, and the statistics will back me up. Most people end up losing all of their money within 3 months, certainly in the FX market. And now that's why I'm really supercharged and super excited about this upcoming 5 days of Christmas special that we are going to be conducting, where you will be able to go over my shoulder live and watch me as I evaluate trading setups on the real-time charts. So my team will send you a link about this special that'll take place in the next few days, and I really hope that you will make time to be there. This is going to be a limited seating, and I know we're going to have thousands of people trying to crowd in, and we won't be able to accommodate everybody. So I advise you or suggest that you sign up as soon as possible if you're interested in checking this out. Again, I will be going in each and every day at the end of the day and evaluating trade setups. You'll see exactly how I approach the markets, how I diagram trades, just like the ones you saw in silver. So I'm super excited for you guys to be there. Now, a couple days ago, I showed you how I made about $70,000 going long the euro versus the Japanese yen. But as I said at the time, I was very skeptical of this move extending. This was just a short-term burst that I hopped aboard on a counter-trend trade. And what I mean by a counter-trend trade is that I believe that the long-term secular trend in the euro-yen is lower. I'm just waiting for that opportunity when it does turn lower to hop on board. And I think that that opportunity may be presenting itself. I'm looking at this recent bounce starting to get tired. And now in the last session, we saw what I call a key reversal price action. And I'm going to go to the real-time charts in just a moment and show you exactly what I'm talking about on the euro-yen. Before I go to the real-time chart of the euro versus the Japanese yen, I just want to refer you to a trade that I did just a few days ago. It was Tuesday, November 24th. The title of my email was Euro versus Japanese yen inverted. And the reason why I call it inverted was because I saw a number of inverted head and shoulders. Now, the implication of a head and shoulders price pattern is that once the price pattern has been consummated or confirmed, that prices will head higher as they are inherently bullish price patterns. And you can see that we had an inverted head and shoulders on this time frame, and the market exploded higher. And then we had another inverted head and shoulders at that time frame building, or I was certainly anticipating that. And so I advised our members to get in at a price of 124.21 at the time based on an inverted head and shoulders price pattern. And I said at the time, I really like the risk reward on this trade. As you can see, I entered that long euro-yen trade on my trading platform where I entered the euro-yen at 124.33 and got out about 170 pips higher and made a nifty $72,500 or thereabouts. You know, this is where I closed the trade. Now, I'm going to show you in a little bit, or in a moment, why I hopped out of this trade. So despite the fact that I saw some short-term momentum to the upside, to my mind, based on the long-term patterns, I think that this pair is still in a long-term downtrend. And so I thought that this bounce was going to be short-lived, and that's why I exited, and we may be ready to turn lower. Now I'm going to show you how I make my trading decisions based on multiple long-term time frames. And by long-term time frames, I mean the monthly, the weekly, and the daily time frames, not the 15-minute, 1 hour, and 4 hour time frames as most traders are prone to use. So in this chart, I'm looking at the euro versus the Japanese yen on a weekly basis. And this is where I entered the trade recently at 124, and you can see I hopped out at the 126 level because I saw that there is some long-term resistance coming in on the weekly charts right between 126 and 127, and I didn't want to get caught if the market started turning at this resistance level. Now, in addition, while I did execute a short-term trade on the long side, I do believe that the governing patterns and the long-term trends in the euro versus the Japanese yen is lower. So you can see how we just popped to this long-term downtrend line. Now, this is going to be an inflection point where the market is either going to turn at this long-term downtrend line, or if it goes higher, there could be more left in this rally. But I'm inclined to think that the recent bounce higher is going to be short-lived and likely to turn lower. Now, in addition to the long-term downtrend line, I look at what I call governing price patterns. And to my mind, this head and shoulders, which looks just like a man or woman's head and shoulders price pattern, is a bearish price pattern, signaling that prices will ultimately go lower, which they have done since that bear pattern was formulated. Now, in the more recent time frame, we have a double top, which looks like an M top or a reversal top that projects that prices will also go lower, which they have done. And so now you see that prices have bounced within the cadence of what I think is a long-term downtrend. And so whether it peaks out here or a little bit higher, I do feel that the euro yen will pop back into its original trend, and we could be seeing that already. And in a moment, I'm going to examine the daily charts and show you how I now lock in on opportunities where I can understand the momentum and the risk of getting in a trade. Before I examine the euro versus the Japanese yen on the daily chart, I just want to refer you to an email that I sent out to our members, whereas I'm now looking at the euro yen as hitting a resistance zone and perhaps poised to start turning lower. So you can see how I looked at the weekly charts, and now I'm looking at the daily charts to set up my trades. So you can see this was the setup. I'm going to go to the real-time charts in a moment. Euro yen looks like it's run out of steam right at a resistance zone. It had a series of what I call inside day bars, and today we made a key reversal. And so I advised our members to put a sell stop under the low of the key reversal bar. So first I examine the trades, the setup, and then I require the market to confirm my trade. So if the market does not go lower and trigger this, then I will not be put in the market. So I require the market to confirm with an execution strategy, and I'll go through that in just a moment. So you can see I suggested that our members put a sell stop at 125.71, and I said, notwithstanding the recent big bounce in the euro yen starting last May, based on the long-term charts, I believe this pair is in a long-term primary downtrend, as I just demonstrated to you. The recent stall in upward momentum demonstrated by the inside day bars, combined with today's large key reversal, suggests prices could be poised to turn lower. Now I'm looking at the euro versus the Japanese yen on a daily chart. And you can see this was the inverted head and shoulders that I was looking at that was likely to give rise to further momentum to this resistance area. And on that basis, this is where I hopped aboard the long side of the market, and you can see once it hit this resistance zone, this is where I suggested to our members to exit the trade, and as you can see, I made a nifty 72,000 plus on that trade. Now you can see in the more recent time frame that the rally is starting to stall out right at this key resistance area, and remember that this is in a long-term downtrend, so I didn't want to be caught with my pants down here and holding the bag as this thing starts turning back into the trend. Now, I don't know if it's going to do that at this particular juncture, but you can see that we're starting to run out of steam, where ever since we made a new high, we've had a series of lower highs. Now, it's not really discernible. These are what I call small, narrow range trading bars. They look benign, but to my mind, could signal a reversal. And what I mean by an inside bar, you can see all of the recent 4 days trading ranges are within the trading range 4 or 5 days ago. So to my mind, it indicates that the market is stalling, running out of steam. Now, in the last session, we had what I call a key reversal, where you made a new high and then you close on the very low of the session. Now, these key reversals in the direction of the major trend sometimes point in the direction they want to go. So I suggested to our members to put a sell stop right under the low of that key reversal. So if the market now continues going higher, no harm, no foul. Our sell stop won't be triggered and we won't be put in the market. But the nice thing is, if this in the middle of the night turns and triggers my stop, I'll likely be put in the right side of the market. So this is an indication of my layered trading strategy, which I will share with you in more detail when we go over the shoulder live in a few days. So I hope you got a ton of value or input out of this video. And once again, I encourage you to sign up and register for our 5 Days of Christmas special, which will be taking place in just a few days. And so I look forward to seeing you there. And until next time, I wish you a healthy and prosperous trading week.